Consumers are rounding out this first quarter of 2026 on a pretty somber note if you look at the University of Michigan Consumer Sentiment Survey. It's Friday, March 27th, and this is Markets with Megan. If you like this podcast, please subscribe, hit the alarm bell. You can share it with friends, family, colleagues. We go over that economic data that you see on a regular basis and what it means for the markets, what it means for your investments. And this morning we received the final reading on March's University of Michigan Consumer Sentiment Index, and it showed that consumer sentiment fell to a 3-month low for the month. We saw a decline in both of the components, not only the sentiment on current conditions, but also sentiment on future expectations. In fact, that saw the biggest decline that we've seen in about 11 months. The other thing that this index looks at is inflation expectations, and we saw that 1 year ahead inflation expectations rose pretty significantly to 3.8%. That means that consumers think that what's been going on with the war in Iran is going to filter into inflation over the next year. It was actually the largest 1-month increase that we've seen since that Liberation Day move in April of last year. Now, some of the reasons why sentiment was weak was not just because of inflation, but also the expectation for household finances. So when you have higher prices and you're not as optimistic about income, that causes a deterioration in the expectation for household finances. But we also saw more people expecting higher interest rates over the next year. So for a long time, consumers had expected that the Fed would be cutting rates. Well, it's starting to get a little bit more realistic. And in this report, we saw not only declines in lower income households, which do tend to be more sensitive to the moves we've seen in energy prices, but because of the market weakness, we're starting to see this filter into some of those middle and higher income households. So clearly, the sentiment has been weak. Next week, we'll get information on spending, retail sales. So we'll see if some of this weak consumer sentiment filters into spending numbers. And the markets are significantly weaker again today. It doesn't have to do just with this report. In fact, sometimes these reports get overlooked because it is a second reading on this index, but it has a lot to do with just this ongoing tensions with Iran, the uncertainty around what's going on with Iran, and we are seeing energy prices again higher today. We're also seeing a pretty big slip in technology stocks where the Nasdaq has now entered correction territory. That's all we have for today and this week. If you want a history of our podcast, go to marketswithmegan.fm. Thank you.